Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we're going to take a look at how to read a candlestick. So as we start to look at candlestick patterns instead of like, single candlestick patterns instead of like big, huge patterns on the chart, we need to understand how to read a candlestick. Now, you can see these are black and white, black being negative, or sometimes you'll see green for positive and red for negative. It really doesn't matter. The color, just as long as you know, you also see like blue and white. There's multiple different types, but it all gives you the same information. So what you have is a body, and the body changes lengths. So this is your body here, this is your body here, this is your body here, and so on. You notice how that's very small, that's very small, that's very small, but this is very long. So when you have a candlestick, there are a couple of things that you are paying close attention to. The first thing will be the wicks. So let me kind of stretch this out a little bit. And you'll see wicks come in all different shapes and sizes. And now this particular candlestick gives you 4 pieces of information. I'm going to switch to the bar chart because you'll see a bar chart, candle chart, same thing really. Candles give a little bit more clarity when looking at, glancing at a chart, but it is the same information. So, for example, this tick here on the left on a bar chart is the opening price. This is the opening price of this bar. This is the opening price of this bar. This is the opening price of this bar. This is the opening price of this bar, and so on. The closing price is on the other side of the body. So there, 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 and there. Those are all closing prices. This is the closing price. It's not actually closed yet of this day, but if it were to close now, that would be the closing price. The high and the low are represented by wicks or the body, if there is no wick. And so there's your low, there's your high of that particular day, there's your low, there's your high of this particular day. If this day were to close right now, then the low would be almost the exact bottom, and that does happen. So let me go ahead and go back to candlesticks, and you'll see now we don't have a tick to differentiate. What we have is a body. So this white candle shows positive appreciation of price. So you can deduce automatically that it opened at a lower price than it closed, hence it gained in value. So there is your opening price. There is your closing price. That's the absolute high. That's the absolute low of this particular day. This works the same on any time frame. I'm just happen to be using a daily chart at the moment. So for this day, that as I record, this is the opening and that's the close. If it closes right now, and you know this because it's black, or it would be red, it would be negative, just like this would be green or white. So you can deduce that the opening price was higher than the closing price, thereby making it negative. The high was right here. The low so far is right here. And we'll see how it plays out. This candlestick here has huge wicks in a small body. That tells you that the market had a lot of volatility that day. Just like on a day like this right here, it was pretty straightforward. It was pretty straight up in the air. Same thing here, same thing here. So it gives you an idea of what's going on in the market. This is an indecisive day here. Open and close, same price. Low and high, not extraordinarily long from or far from the opening price. But basically the market just chopped around and did nothing. You could say that this is a somewhat indecisive day, but a lot more volatility. Obviously, price had been all over the place. So that's one way to look into it. Now, there are a whole host of particular type of candlesticks. Most of them that people pay attention involve either paying attention to the wicks, sometimes they call them shadows, or the body size itself. The one thing about body sizes, so like in this body here with a small wick, that tells you a lot of people were buying in. They were fairly confident to go home long of Bitcoin that day. Just like here, they were much more comfortable being short or being out of the market. If this closes the way it does right here, this would be a very bearish sign. Granted, you can also make an argument that there's support there. And that's a little foreshadowing, so much in the fact that support and price action, meaning the way candles form around support and resistance levels, will be a huge part of what you're going to do. You will continue to see that pounded time and time again into your head. So here you had a very negative candlestick in Ethereum, and you can see we have dropped since then. Much like in Bitcoin, we have an area here that seems to be support and resistance that we're kind of hanging around. Maybe a little lower than that, but like something like that. But you get the idea. There are specific candlesticks. This is called a hammer. That's one that a lot of buyers will be interested in because it shows that the sellers tried to push the market down but could not keep those losses going. So keep in mind that if you are short of a contract or a coin or a market or whatever, if it goes in the opposite direction, you have to buy it back in order to cover your losses, meaning if you are short of this and you're losing money, you're actually buying to get things turned around, and that adds more momentum. And more on that later. Again, very bearish candlestick, two huge bearish candlesticks. That being said, I can pretty much guarantee that, yeah, it'll be out of the Bollinger Band, so it was overdone. Just take it from there. So let's go ahead and take a look at let's do Binance, and let's do this on a 15-minute chart. Looks the same, tells you the same story. Minor support level here. Crashed into it. The buyers tried to supported it for the next 15 minutes, and then we broke through it. Notice how, just a pound in your head. This area here is resistance. So you can start to look for candlestick setups to short this market, as an example, when we rise there. And we'll get more into that as time goes on, but just be aware that just like a bar chart, each candle has an open, high, low, and close. So that candlestick, see how it's negative? That's how you know that's the open, that's the low, or that's the close. Open, close, low, high. So now we'll start to look at something a little bit more in detail. Bullish and bearish engulfing candlesticks are up next.